intersection number, when that gets down around 0, that's where there is no sellers. Now, that can lead to blow-off tops. That can lead to more momentum. But once again, on that 6-month rolling average, we want to be a little bit cautious. All right, so I was talking about analysts, and I know that we still have people getting out of bed, right? I know that people are still waking up. It's 5:45 on the West Coast. I appreciate you getting up and joining us. Shulin, I'm glad that you like that. Mayhem 645. Do we need to sign the terms and conditions now every day to get into the room? Mark, I don't know. I don't know. That's new to me. I signed it. Charlie already starting with the F and GD man. He's ready to roll. Let's dig into it. All right. So I thought that this was my number 2 story. I apparently forgot that I switched this at 8:14. Okay, so Venezuela. You've heard of it. Apparently, I've been pronouncing Maduro wrong. Apparently, it's like Maduro. I watched a woman from Venezuela say Maduro. Maduro is not our president. I was like, oh, I've been saying it wrong. It's my fault. Apparently, that East Coast cornbread voice, mi español no es malo. 30 million barrels to the U.S. Okay, this is pretty simple. Upstream, not good. Remember, there are 3 different parts to the energy supply chain. First, upstream, oil and gas, companies that pull it out of the ground. It's called upstream. E&P, Maduro, that's right. There's a big do in the middle. Duro. All right. That's not helping us. I will go on a tangent about this for 3 hours. Upstream. So Occidental, those names that we've talked about in the past, those are the ones that are going to face some pressure here because, again, this crude coming from Venezuela, from the former home of Maduro. Key thing here, there's going to be some pressure on those upstream names. Midstream, who cares, right? Pipelines, ships, storage, that's all well and good, right? They're being paid no matter what to move and store things. It's the refineries. Venezuela. I have his hat. Where is that? Let's put that on. See? That's why you always want to have a good Fernando Valenzuela hat available at all given moments. All right. So, where were we? Okay, so Valero and all of these refineries, keep in mind, the purpose of these refineries were to handle this heavy crude. So Valero rolling, some of the other refineries rolling, and people are going to ask questions, okay, what do I do right now? How do I trade this? What's the key thing that I want to be focusing on? Really, again, you could chase this stuff, but I just tell you, sell some spreads on these refineries. 30 to 50 million barrels, okay, coming. It's got to go through our refining network. This is fantastic news for these refineries that they're going to be able to bring a lot of this stuff online. The vertical integrated players, Exxon's going to be doing what Exxon does. Chevron is the primary beneficiary of all of this because they're the ones who were on the ground, but they're actually getting downgraded right now, right? So the idea that the sector's rally on the operation is unjustified. We had that pop. It's going to be relatively difficult couple of weeks to really let this shake out. So Chevron is an integrated player. So they're across the board. They own a lot of oil and gas wells in Texas. They own pipelines. They own refineries. They have, JVs. They are the ones on the ground already. But that said, it's the refineries that you want to keep your eye on at the moment, the ones that you probably want to trade. And again, you're looking for a 20% probability, 20% return, 80% probability of profit, and 100% annualized return. If trading PSX, selling spreads, it's going to be down here, right around the 130 level. And if you're looking at Valero, which I think I am pronouncing correctly, that's going to be down around the 170 to 165 level. don't go too overboard on any of that. I'm really confused as why the U.S. Energy Secretary owns all of the oil in Venezuela. I don't know. Okay, let's get to the thing that actually matters. Okay, Goldman Sachs comes out today, or the last 24 hours, and Goldman says, hey, everybody, market's going to 7,600. Yep, okay. So you're unlike anyone else, but, by the way, it's going to go to 7,600, and the market is overvalued. So they hedge their bets. They say, we're going to 7,600 like everybody else, but then they turn around and they say, S&P 500, 22 times forward earnings, as if I care about that. We are near .com levels, as if I care about that. Top 10 stocks are 41% of the index, 32% of the earnings, as if I care about that. Because once again, the incentives of the market have been driven by capital, liquidity, and passive flows. Why are the top 10 stocks 41% of the index? Because NVIDIA is in 1,500 ETFs. Apple, 1,500 ETFs. All of the passive flows, all of the incentives of the market have driven that concentration. At the same time, the Treasury Department keeps issuing at the front end of the curve. The Fed keeps printing money, saying that they're not, and that money flows into leveraged funds. Leveraged funds rehypothecate, which is a term for using the same stocks over and over and over again to borrow money, and it all ends up into the same place. That's why the market's so concentrated. So I don't care about a lick of this, but it's again that story, that conversation, that debate around too much concentration, too much in one place. Once again, it is the market's downhill movement of liquid moving downhill. Everything concentrates in one place because that's where the incentives are. So the market leadership is extremely narrow. It has a fragile structure. Okay, we get that. But they're warning, once again, this is .com level stuff, and then ultimately we will see a valuation compression. I agree. But they're not telling you the real story. And the real story, Secret Agent Charlie, is this chart. Okay? This FNGD chart, which I wrote about extensively yesterday, extensively explaining how liquidity and how momentum work in tandem. Momentum is a reflection of liquidity in the financial system. And when liquidity is ample, there's no stress. When liquidity starts to dry up or the repo market starts to show stress, these are the stocks, those heavily concentrated stocks that start to unwind, and they unwind quickly for a variety of reasons. International capital leaves the U.S. markets. That leads to deleveraging, or they can't borrow anymore, or the value of these assets starts to go down, and therefore the collateral value of these assets goes down, and everybody sells at the same time. This is how the market works now. It has been doing this for about 10 years, and nobody talks about it. But if you want to see in real time where that stress is, where the stress is, where that stress is, it's in this chart. So I just want to remind retail traders and retail investors that when this breaks, it's 20 and it's 50-day moving averages, something's off. This is a reflection of the deleveraging. So when we are under these key moving averages, it's all good. There's plenty of cash sloshing around. There's plenty of money pouring into those big names, all the things that Goldman is warning about. The money is there. But the moment this breaks, there's something off. And whether you're analyzing momentum, because, again, momentum is a reflection of liquidity, right? If liquidity is not ample, momentum is not going to be strong. That's all you need to know. Keep it very simple. I don't like complicated things, right? I like my hat. I like my vitamins. I like my phone. I only need these three things. And this Kennedy Center cup. The hat, the vitamins, the phone, and the Kennedy Center cup. And the Mickey Mantle card. I only need these 5 things, right? I keep it simple. And if you're not getting the jerk reference, I apologize. Goldman, not doing anybody any favors, but just to see the structure of the market itself. NVIDIA is still buying chips. Is the FNGD a signal, or is it okay to buy? I do not recommend buying it. I recommend, though, using it as a tool to see what specifically is happening, and then to recognize that's the time to potentially hedge, or to start shorting the SPY, or to start turning around and buying the SH, which is the inverse ETF for the S&P 500. And you could buy calls on things like this. The FNGD, I don't even understand why it exists. It's the greatest thing ever. That's one of the fun things about the market. There's all these little tiny things that exist that I go, ooh, I just turned to this, and people go, what the hell is that? Josh Brown was so confused when I brought this up. He said, what is this thing? And then he looked at it and he goes, oh my God. Like, this is the thing. This is momentum reflected into one chart. And the funny thing about it is the FNGB or FNGG, right? When this is above these moving averages, this is just a double bull ETF. When this is above these moving averages, liquidity's fine. Liquidity's strong. That's what you're looking for, right? So, no, don't buy it. Don't buy it. Yeah, I didn't even know. I don't even know when I went to the Kennedy Center. I got to figure that out. I got to go back in time, look at my schedule. NVIDIA is still buying. And once again, NVIDIA has kind of been the quiet winner out of the recent couple of days. Now, I don't know what all this nonsense is, but yeah, we've got CES conference. This has been holding above its key moving averages. When NVIDIA breaks down, that's typically aligning with FNGD as well. But once again, it's just the story that the AI trade has not gone away. I will tell you, though, that the moment that the CES conference ends and this story kind of dies down, that's where you got to be a little bit cautious, because people will say, well, wait a minute. Sounds like there was a nothing burger. Do want to talk about this chart real quick. I didn't get a chance to talk about it. We're going to continue to blow through and just plow through it. It's 9 o'clock in the morning. I've had enough coffee to put down you can't put an elephant down on coffee. That was a bad analogy. U.S.-China liquidity, okay? You see the black line. You see the orange line. These are the liquidity cycles of the market. This is still the story of the year, okay? So forget all the stuff around Goldman and focus on this chart. This is from GLI, which is the Global Liquidity Index. This is Michael Howe. Okay, so as you can see, those orange and black lines had largely aligned with one another for a strong period of time. Then they started to break, and that kind of shifted back in 2015, 2016. Back in 2015, 2016, that is where China had a massive debt deflation crisis and pumped more money into the system than I think anyone ever had before. That helped lift off U.S. equity markets after a 20% downturn in late 2015. And then when the U.S. started to pump at the front end of the yield curve, the U.S. equity markets really started taking off in 2017. You're seeing a divergence right now in these liquidity cycles. The U.S. is starting to go the other way. Now, why does this matter? It matters because if this shift continues, the AI trade is in trouble, and the movement in capital typically will go toward the XLP and defensives, and then ultimately duration. There was a fund that came out this morning or last week that said the play this year is a 40-60 portfolio, which would be 40% stocks, 60% bonds. And there's a reason that that is actually intriguing. It's because the shift goes toward duration and bonds. And then as as interest rates, or if interest rates do start to decline, the bond prices go up. So interesting defensive move. The point that I want to make here, though, is that we're looking at the defensives, the XLP. When the XLP starts to break its 20, probably sometime in Q2, Q3 is where this really is going to play out. That's where it's going to be time to make that shift. That said, the other part of this third part of the liquidity cycle is that it typically aligns with speculation in metals. And that is where this is going to start to get a little gnarly. So there will be speculation in metals at the exact same time that China is going to start printing as well, and they have been, and that's bullish for metals as well. So Gianni and I were talking yesterday about metals and prices and things along those lines. The reality is, do I think silver's going to 140? No. But do I think it can go to 110 silver? Yes. And the reason is not any fundamentals. It's speculation built around the back of stimulus, looking at copper to continue its strength. I'm saying now, if we get the pullback and if liquidity is strong, you want to be buying the dip on copper and you want to be buying silver if it gets back down into the 60s. All right. Don't we have runs anymore? What? Are you talking about the runner, Ed? I've spoiled you. I'm just talking. We're going to get to it. Just because I said 9 o'clock, look, I'm just fashionably Maryland late. TU, what do you do? Tell us. Communications, waking up a little bit. We're going to shift to that hourly, holding above that key line. This is a pretty simplistic move. Strength across on that 1 hour. The improvement here is what I'm looking for. I need to see this MACD continue to expand, but RSI, MFI, TU is the ticker looking to break through that 1358 level and see if we can get back to that 1429 number. That's not really that exciting. What's exciting to me is the fact that if I looked at the insiders this morning, I was spending some time going through insider analysis. They are buying up names like Land Bridge and water infrastructure names flow into real assets, which brings us to uranium. This is not over. And uranium continuing to show strength. UUUU is a name that I am going to sell spreads on constantly this year. I like this trade. I don't think that there's any real slowdown or capacity that uranium prices are going to collapse in any way. We will see, right, sharp volatility potentially in copper. Copper's already had a big move. It went from 6 to 430, and then it rebounded all the way back up here. Uranium, I don't see moving that violently this year. So if I look at UUUU and I go out to February, this is a pretty simplistic trade. You can just sell the 14 and buy the 13, and you're going to end up with about a 19 to 20 cent spread. It's 20% return on risk, 80% probability of profit, annualized at 190. Again, down here, 14-13 spread. 45 days out into February. Pretty simple. UUUU. Once again, selling the 14, buying the 13, looking to buy a couple hundred shares in the stock if it pulls back. Break even at 1381. Do a couple of these, 3-4 of these. I'm happy actually to buy UUUU at that level. And then if it gets assigned, I'm selling calls to the upside and looking for continued breakout opportunities as they emerge. BTU, look, all the coal stuff's on board. Scott won't shut up about coal right now. He will tell, if you ask him, he will tell you about coal. He will tell you all about West Virginia. And you know how you get married? You get married. Well, my wife teaches at a school. She tells the same stories over and over and over again. And it's usually the next time that I see a different family member or a different friend. I've heard the story about that one kid probably 9 times. Scott and I work together. I've heard the story about West Virginia coal 26. Just saying. Good opportunities, though, right? Look, coal prices aren't going anywhere. This is a China trade as well. And whether it's NRP, which we talked about, whether it's BTU, all of these opportunities continue to persist. And I keep saying, don't chase the downside or upside. Go down here, right? BTU's paying, right? It's got a dividend. This used to be a pretty strong dividend stock. But you come down here into that 28, 27.50 level and you sell a spread. All right. All right, so BTU, same thing. Same thing. Oh, man. Are you guys going to start quoting Toby Keith now? This is just momentum. And, this is one of those stocks, Huntington Ingalls, we're looking at shipbuilding. Are they finally going to do it? Are we finally going to actually start to build things? Are we finally going to expand these contracts? This has just been a great, smooth momentum stock the whole year. You're buying on the 20-day. So right now, I'm not kind of crazy about trying to time this here, especially when we're overbought. But I would look to purchase a share or two here and a share or two here if we touch that level. But continued momentum, very strong here. As usual, continuing to focus there. All right, so there's that. HRL, Hormel. Man. It's just a bad time for consumer defensives. They're just not waking up. So buying up here on the put, 24, selling down at the 21, going out into February. Continuation of trend to the downside, lower highs, lower lows. Just weakness in consumer defensive because, as we've said, they just want to continue to ride momentum until it breaks. Pilgrim's Pride, same thing. Apparently, nobody wants frozen peas. It's a shame. They have very good edamame. Oversold right now. You know what? This is one of those names where it's very cheap. Somebody should just buy this thing. What are we doing? 5 on the EV to EBITDA. This thing is dirt cheap. Pilgrim's Pride, I'm not going to short it. I'm going to actually look to see if I can buy this stock at like $30. Because once again, as I've said, when we get to that point where capital is going to flip into the defensives, it's going to come over here. It's going to be in the frozen food section. Pilgrim's Pride. Hey, who's not excited? MSTR is strategy. That's on our watch list today. And can this wake up? Can this wake up? Well, probably. It's just, again, the whole focus on, hey, let's buy a bunch of Bitcoin. This thing's trading for less than its book value, right? So less than the share, sum of its parts. It's just, I got to get away from stuff like this right now. I want to focus on a little bit more fundamentally driven names. And if I'm going to trade something like MSTR, I got to do it on a daily chart. I have to be focusing on volume-weighted average price. And even then, you're seeing, even on a 15-minute chart, pushing against resistance levels, rolling right back over. I'm tired of talking about some of this stuff, but that's when it'll go up 100%. ASTS. So Gianni and I were talking about all types of crazy stuff that was going on right now. I guess we're going to get into the satellite phase of speculation, all the stuff around these SpaceX. My mother, who is in her 80s, said to me the other day, do you know how we can get in on these SpaceX pre-IPO shares? And I just looked at her and I said, no, don't do that. Because that would be a fitting way to just literally have it all go up in a rocket and blow up. I said, you need income. No, my father's still around. ASTS, just pure momentum. Same thing here. This is an hourly chart stock to trade. So once again, you're looking for moves back to these levels. This is not sustainable. This is just pure momentum. This is stuff to trade with an 820 EMA. You're seeing these breakouts and these rollovers. So a little stretched right now, coming toward overbought. This actually becomes a short, looking back toward that $85 level, and then glue. I thought it was a horse stock. It's not. It is. I don't know what you do. 41%. Congratulations. We're a little late. All right. So real quick, 4 minutes. Just gonna do the old Uncle stock. Look at that. We're going to go back to 1997, everybody, because I can't find F-score and gram score and all the other things I need in one place. How is this the only thing that exists? Come on. Seriously. It's the only screener that has what I need. It's the only one that fits my needs. Adjusted ETF as well. All right, so gram score. We've talked about this a little bit. I just want to pull up some of these names just so you see the way that we're screening this and what we're specifically looking for. Market capitalization has to be over $500,000, and there's a reason for that. Because if any of these companies were to become takeover targets, at least they can afford the activist defense to do it. Why does that matter? Because it's $5 million to have Evercore Goldman Sachs defend you. 20-day moving average, SMA. We need to have that. We want to be, how far away are we from that moving average? Because all we're doing, which is very simplistic, taking stocks with very high F scores, very low gram scores, market caps over $500,000, and they are approaching their 20-day EMA. That's our 20-day SMA, but we can adjust that for EMA. And then from there, we're buying the stock if it breaks out, and or if they have options, we're buying those options and keeping tight stops. Very simple. There's nothing. This is the simplest thing in the world. My mother should do this instead of buying SpaceX. And then P. Last thing that I need. I want to have this figure be over 40%. All right, show me the numbers. Show me potato salad. All right. So you got 14 names. First off, JOYY. I don't know what we're doing as a people. We should just be long the stock. China, momentum, communications, printing, joy, just pure momentum. I like the stock from its valuation metric, and I like the fact that, again, this is a Singapore company with a lot of ties to Japan. Rayonier, by the way, which was on this list. I don't know if anybody caught this one. This has been beaten up, but it was the other one. What's the one that's like Rayonier Advanced Materials? There it was. RYAM. Again, things that actually matter. Things that are worth a damn. These stocks are taking off to start the year. Greenbrier's had a nice run to start the year. Costamere's already breaking out, so there's where your first start's going to be. CMRE. Hello. All right. CMRE on that daily and on that hourly. We're looking for some of these cruise lines, shipping companies to wake up a little bit. Your next names are going to be YPF, Clean Capital Energy, and Sandridge if we get there. We want to see these names break these 20-day moving averages and look for continued strength. Strong buy on Joy, Costamare, strong as well. And then these other names that have just already taken off, NBR, we wait for them to come back to earth, and then we go back in as we go. So this, to start the year, has had a nice move, by the way, 54 up to 61. We wait for pullbacks, and we just continue to ride these names. Uncle where do you come up with these screeners? I've been doing this for 28 years. If I don't know all of these screeners by now, there's a problem. Zim is on this list. Costamare is on this list. Clean Capital, AeroCap, Seaboard. We'll go through a couple more of these names later today. There are some things that I should take off. I could take this off real quick, and I can take this down to 20, and it will add a couple more names. We're at 14. And then, Don, I will get out of here so that you can put on Panama. You added 18 names the moment that you got down into a lower market capitalization, right? And you can buy some of these names. You're just going to be stuck holding them for a little while and waiting for the market to catch up. Farmland Partners is on there. I love this stock. Gas is on that name as well. Big fan of that as well. Sandridge. FPI is the ticker. FPI. There was a big purchase today on Landbridge down in Texas, just pointing it out. There is money rotating into land right now. All right, everybody. It is 9:21. Thanks for putting up with me today. Congratulations on my pronunciation skills of Maduro and Fernando Valenzuela, not Venezuela. Secret Agent Charlie, thanks for joining us as always. MW, David, everybody else. I will be back at 3 o'clock to do whatever we just did, a little, but just harder. And Don will be in here in about 9 minutes to make fun of my haircut. All right, everybody, have a great day.